Welcome to the How to Be Moderately Successful podcast. I'm your host, Mike Scott, and I'm also the co-founder and CEO of Nona Digital. Today, I'm joined by Jeff Wu, co-founder and CTO of Notional Finance, a decentralized lending protocol. We'll be talking about decentralized finance and Jeff's journey to where he is today. In this podcast, we explore FinTech. We look at how to build better FinTech products, better FinTech businesses, and how to work on yourself to be as effective as possible. We get a lot of messages to thank us and our guests for our content, which is great. But if you'd like to support us, the best way that you can do that is to give us a rating and a review. It's actually not that easy, so we set up a link to make it a little easier. If you head over to ratethispodcast.com/how to be moderately successful, you can give us a very quick rating and review, and it really does make a difference. So thank you in advance. Today's episode is sponsored by ourselves, Nona Digital. In today's hyper-competitive environment, getting your software designed and built right really matters. But you also need to focus on building your business, your team, closing your next deal, and making the impact that you need to make. And this is where we can help. We are an expert firm that designs and builds FinTech software, and we do it with a level of care that is rare and difficult to match. We're big enough to be able to deliver at the highest standards consistently without key person dependencies, but we're small enough so that you're always close to the principles. We have deep expertise in building FinTech products with a particular specialization in blockchain application development. If you are building a software in the FinTech space that is not safe to fail and that requires high trust and engagement from your users, then it's likely we're a good fit for you. Jump on to www.nona.digital, where you'll be able to book a call directly with myself or my co-founder to see if we are a good fit for your project. Lastly, we have a number of senior software engineer roles open at the moment. So if you're listening to this and you are one of those seniors, or you know one of those seniors, and Nona sounds like a good home for that senior, please do get in touch. There's a tasty reward for any successful placements. And now on to the show. Jeff Wu has got a BA in mathematics. He started writing code at the age of 10 and has not stopped since. He's worked as a software engineer for many years, including 6 years at Atlassian, where his last role was engineering manager of the analytics and integration team. He then went on to Splunk as a senior product manager, working on blockchain-focused products, which led him to his current project, which is as the co-founder and CTO of Notional. Notional is a decentralized protocol for fixed-rate lending built on the Ethereum protocol. They recently closed their Series A round of $10 million, which included investment from Pantera Capital, which is one of the leading blockchain-focused VC firms in the world. A real stamp of approval, in my opinion. Welcome, Jeff. It's great to have you on the show.
Thanks for having me, Mike. Great to be here.
Cool. So let's start off just with an explanation to the listeners. Our listener base is not all super technical, and certainly not all super technical in the DeFi space. So in as simple as a manner as possible, what is a decentralized lending protocol?
Yeah. So decentralized lending is sort of one of the kind of emerging products from this broader space that we're calling decentralized finance. And it's really kind of taken off in the last year. And, the product is, basically what it sounds like. It's lending and borrowing. And lending and borrowing is really fundamental to the financial system broadly. Lenders, who you put money in a savings account, you might buy certificates of deposits or bonds. It's a great way to get sort of safe, predictable yield on your money, right? So if you lend $1,000 at, 5% interest for a year, you're going to get $50 back. And that's something that you can depend on and feel very secure about. And on the other side, borrowing is something, we're all familiar with, right? You want to finance a purchase of a new home, a new car, go to school. Typically people borrow money to do that, right? And they'll pay it back over time. And that interest that you pay over time goes to the lenders. And, that's basically, that's kind of the crux of the financial system broadly.
So you just described the traditional finance system where it's typical when you say lenders, I think most traditional people think of banks, right? So very large institutions with massive balance sheets and that are very difficult to compete with. There are certainly boutique lenders in a traditional system, but I think for most of us in the traditional mindset, when you say lenders, it's just another word for a bank. Now, this decentralized finance movement has opened up opportunities for non-banks to provide, let's say, lending opportunity. So you've built something that provides a decentralized lending capability. What does it mean to the average user when we talk about a decentralized lending platform?
Yep. So to me, the real kind of innovation of decentralized finance is the removing the intermediary, right? So when you go to a decentralized lending protocol like Notional, um, the lenders are lending directly to the borrowers, and the borrowers are borrowing directly from the lenders. Now, there's a lot of kind of complexity in kind of like making that happen and making that happen on the blockchain. But when you remove the intermediary, what you get is an experience that's very frictionless, right? So if you wanted to borrow money on Notional today, if you want to borrow $1 million on Notional today, you could go to the website notionalfinance.com, and in about 4 clicks, no sign in, no passwords, you could have that money very securely in a kind of digital cryptocurrency wallet. And you can do that in about a few minutes. Now that's just simply not going to be possible through sort of a centralized traditional financial system, right? Where you're going to have to do a lot more kind of paperwork and a lot more processing to get access to capital that way. And that kind of like experience, that really distilled low friction experience, I think is just a massive step change in how we can create new types of financial products. So it's just very exciting, and every time I use it, it feels very like magical almost. Yeah.
So I'm going to come back to the removal of friction in a minute, because that's fundamental to blockchain as a whole. Mm-hmm. But I want to just jump in and dig in a little deep in a couple of things. And I'm purposefully asking some pretty simplified questions so that we can just dumb down the level of conversation, because obviously you're speaking at an expert status, and I want to bring this down just a notch. So when you said we remove the intermediary and we're connecting borrowers to lenders directly, who are the lenders in this equation?
Yep. So I think I can kind of describe simply how Notional works. If you're a lender, so typically in decentralized finance, you're not working with dollars, much like in a bank account. You're going to get what we call stable coins. And stable coins, you can think them as these digital kind of blockchain representations of dollars. And so a very popular one is called USDC, US dollar coin. And so I'll just kind of refer to that. So what a lender would do is maybe they'll go to an online exchange like Coinbase and deposit, regular US dollars and sort of get an equivalent amount of USDC, like US dollar coins. Those US dollar coins now exist on the Ethereum blockchain. And you can think of them as just US dollars on the Ethereum blockchain. And they're tokens that I can send to you, Mike, I could send to, my mom, and, they would have sort of US dollar equivalents. Now, if you want to earn yield on that, and particularly if you want to earn a fixed rate yield, you could go to Notional Finance, or you can go to one of the kind of other decentralized lending platforms out there. On Notional right now, I believe we're quoting something like 6% fixed interest for 6 months. So you would deposit that US dollar coin into the Notional Finance smart contract. So you'd essentially be sending that US dollar to smart contract. I think we can talk a little bit about what that is. And that smart contract will then promise to pay you back your US dollar coin plus 6% interest at a specific point in time. And that's sort of the product that that Notional is giving you. I think that's a kind of the simplest way I can explain. Yeah.
Great explanation. Really, really well said. I think just a couple of things to drive home as well is that, yes, this is typically a cryptocurrency, but it doesn't have the volatility because it's directly pegged to the US dollar. So just to the listeners out there, what Jeff's talking about with the stable coin is really the most important thing to recognize there is it's not like Bitcoin or Ethereum where you're at this huge volatility risk. It tracks the value of the dollar. So you're putting your money in. Yes, it's running on a cryptocurrency. It's running on Ethereum, but you're not subject to big fluctuations. So you're getting that interest back on a pretty stable, low-risk investment. I guess the risk is that the entire network topples or that it all becomes illegal somehow through some crazy regulation. But I guess that's a risk that is, in my opinion, this is not advice. In my opinion, that risk is decreasing all the time. But this certainly is not financial advice, right? Yeah. So yeah, and I won't make you talk about that, Jeff, because that's probably unfair. But I'm guessing we agree on that.
Thanks, Mike.
So So, okay, awesome. So you're basically creating a lending platform using blockchain technology, cutting out the banks, cutting out the middleman, connecting borrowers to lenders directly in an incredibly efficient way. Now, I want to ask maybe a little bit more of a challenging question. I'm a huge proponent of blockchain-based technology. I love the decentralized finance movement. I love the fact that it's removing all of this friction. You don't have to go through crazy, ludicrous amounts of paperwork and have some people judge your entire life in terms of your ability to lend and borrow and pay back money and things. But it's there for a reason, right? Regulation is there to protect people in general. Whether it's executed like that, we don't have to debate that. But that's the reason it's there. It's to protect the consumer. With making this so incredibly frictionless, as you said, you can go to your site within 4 clicks, you can get a pretty large amount of money in the form of a stable coin, but you can get money very quickly. In other words, you can get yourself into debt very, very fast. I love that because I consider myself a responsible financial person. I understand finance. I understand how these things work. So for me, that's fantastic. I just want the friction removed. But there is a downside to this. And that downside is that you're removing all of the friction. The upside is the downside. How do you think about that part of this? How do you think about the sort of, we're doing an amazing thing here by removing friction for, let's call it savvy financial people. But how do you think about the risk of the non-financially responsible person that goes onto a lending protocol? And it's not just Notional. This is a problem and an opportunity that exists for every lending protocol. I just want to know how you guys are thinking about the negative risk side of removing all of that friction.
Yeah, I think that's a great question. It's an interesting question. So I guess I would say for me, philosophically, I think, it's the role of technology to make things easier, better, and faster all the time. And I think, people will sort of adapt to that. I think I have a higher opinion of how people would adapt to that and sort of educate themselves and be responsible within, their, kind of within their means. One way to look at this is, a lot of people equate blockchain to the kind of rise of the internet. And you could say, before the internet, there's a bit of friction to get information, right? You have to go buy a newspaper or subscribe to newspaper or magazine, or like the nightly news was only kind of like on during certain periods of time. That's like, there's a lot of friction in like acquiring that information, right? And today, we have this very frictionless access to information, right? For better or for worse, right? But, I think for most of us, I think if we take a step back and look at it in aggregate, I think most of us would say, having all of access to all of that information, through the internet, has made our lives richer and like better and in many ways, right? And I think, for many of us, kind of building on this DeFi, kind of this DeFi industry, this platform that we're creating, I think we kind of see it in a very similar way, right? That bringing down like the kind of barriers of access to capital will ultimately result in like, a fuller, richer kind of technology experience for people in the future. And, there of course will be downsides, but I think in aggregate, it's going to be a good thing. And I'd also just want to add on to that, a couple benefits that like don't get talked about as much on, around these DeFi protocols. One is like privacy. So when you go to a bank, and you want to get a loan, you're going to have to reveal a lot of like sort of pretty sensitive information, right? Like, and, as we kind of see, like, the level of sophistication around cyber attacks and like just the, kind of as more information, private information goes into computer systems, they also become, like you also see these very large sort of hacks and like large amounts of identity theft. And the really crucial thing about, how the blockchain works is it has no sense of identity about an individual, right? And that cuts both ways. I think you mentioned regulation. Yes, that can be a challenge. But on the flip side, you can lend and borrow money privately without having to share any sort of information that might lead to identity loss. And I think that's a key benefit of the way the system is designed. Is it's designed to be secure from the ground up. And to me, I think that's also a very exciting innovation that will pay dividends in the long run for people.
Just to summarize that, because I totally agree with you, by the way, Jeff. And I think just to summarize that, and totally correct me if I've got this wrong, but essentially what I heard you say is we are building technology to remove the friction. We're not building the philosophical framework on how people manage their finances. Like, that's not our business. Our business is to remove the friction by using technology to improve this system, um, which I fully agree with, by the way. Like, banks, there's regulation with banks, but they certainly don't actually advocate for financial fitness and financial health. They're pushing credit all the time. They're pushing credit cards, increase your credit limit. I mean, that happens to be legal, which I think is insane. But just to be very clear, I'm certainly not an advocate for banks pushing financially responsible behavior, because I don't see them doing that. What you're doing is not actually trying to drive behavior. What you're doing is building technology that removes the friction. The behavior is still the responsibility of the user, which I philosophically agree with.
Mhm.
The other thing, just to make a note, is these things are still quite difficult to use. You still have to be pretty tech savvy to use any of these lending protocols. You've got to have a MetaMask wallet. You've got to know what that even means. You've got to buy stable coins. You've got to know how to store your cryptocurrency. So there is a kind of at this stage still, in my mind, there's a base level of friction to use the entire system, which means you're probably quite financially astute even just to get onto the protocol. But that's just my assumption. I won't even ask you to comment on that.
Mhm.
Awesome, Jeff. So who who would this be well suited to? So you've created this platform, one of a few. Yours have got some unique characteristics, but who are you designing this platform for? Talk me through like some of the personas that you think about. You've got lenders and you've got borrowers, and you're essentially a platform that matches the two and takes a clip on the ticket. That's the business model, as I understand it. Who who are your target personas on the lending side and on the borrowing side?
Well, actually, just to take a step back there. So, we the way that Notional works is that we actually don't make any profit from any of the lending and borrowing activity. Now, the protocol is like fully decentralized in the sense that we have no custody of any of the assets on the protocol. So when you go and lend and borrow, like the way the smart contracts execute is sort of autonomous from anything that we as a company can control. So we've created these contracts. They're open source. People can take a look at them. And they just sort of execute the code essentially. Now, from a product design perspective, like a system design perspective, we have three personas. We have lenders, we have borrowers, and we have a third persona called liquidity providers. And what liquidity providers do is they sort of, lenders and borrowers don't kind of like want to lend and borrow at the exact same time. So there needs to be a pool of money that can sort of be the other side whenever someone wants to lend or borrow, right? So when you lend, someone needs to be the borrower on the other side and vice versa. So liquidity providers sort of fill that gap and ensure that there's always some money in the system such that people can either lend or borrow. And sort of stepping back from more of a marketing perspective, like who are these people kind of doing these activities? Um, you know, it's kind of fun because like we don't actually know. It's all anonymous, right? We have a Discord channel where we get a lot of people coming in and talking about it. It's very international. From that community of people that like has engaged in this product, we have a Vietnamese channel, Vietnamese language channel. We have a Chinese language channel. We have a Russian language channel. We have a Turkish language channel. So we see from the web stats, we see that only a third of our visitors come from the US. So we have a very kind of, the rest is sort of very broadly distributed around the world.
Which Jeff, I want to interrupt there. Sorry, but I want to jump
Mhm.
into it. You haven't even touched on this, but I know you'll be thinking about this. That's another big benefit of decentralized finance is banking the unbanked, or even if they're not banked, helping people that are in jurisdictions where it might be extremely difficult to get any kind of reasonable finance to get reasonable finance. You're now opening up a platform that has got no borders in terms of limitations. Sure, you might have regulatory environments that are friendly or unfriendly, but I just love the fact that you're a US based business, but you've got, as you said, I can't remember, Vietnamese, Chinese, Turkish. I mean, it really doesn't matter, right? You can be anywhere in the world, and as long as you've got access to the internet, you can use these platforms. And I love the fact that we've sort of opening up these platforms to every single person on the planet. I won't talk about the regulatory environment because I realize that's a hindrance. I'm not an expert on that at all. But just sort of mentioning that, you sort of brushed over that, but that's a fundamental part of DeFi, right? Is
Yeah,
helping people get access to products.
yeah, it's very exciting. I know that like there's this banking the bank kind of phrase, which I find a little like it's okay. To me, I think the way I like to think of it is that it allows anyone to get global access to capital, right? And that capital can flow around the world in like instantaneously in sort of a very seamless way, right? And I think that's probably a more accurate way to think about it. I think the idea of banking them banked, is like, it's not, I mean, to be frank, it's not poor people using this product, right? I mean,
Yeah.
like we're seeing like the average sort of lending and borrowing size, is about $100,000 or more. Um, especially in the past few months. For the listeners who don't know, using this product requires paying what's called gas fees or transaction fees to the Ethereum network, right? So that we do not collect that money. It goes toward sort of the broader blockchain network to sort of maintain security of the network and kind of broader network security. And those fees have not been low in the past few months, especially as there's been a lot of excitement. Um, so I think back to the kind of the persona of the user. Someone who has crypto, who's very kind of technically savvy. We see that kind of breaking into people who are um, maybe more like developers or sort of kind of technical people who like enjoy this technology and like to use these products, and a kind of another persona which is more someone who's more financially kind of motivated, maybe a bit more of a trader, someone with like a trading background. And in that kind of with that persona, we're kind of seeing sort of the increased professionalization of that persona, right? So like I would say maybe a year ago that was like someone, I think they call themselves yield farmers. People kind of chasing high risk, high return kind of opportunities in like a very Wild West fashion. And those high returns have really attracted, I would say, much more professionalized kind of funds that are like much more rigorous in how they execute kind of trading strategies. And that has brought yields down, but has also brought a lot of capital into the system. And so we're kind of seeing that increased professionalization of the user base. And we believe that Notional, which is a fixed rate lending and borrowing platform, the product itself is a little bit more sophisticated. Really caters to a more professionalized kind of like trading trader in a sense, because the product itself looks very similar to what you would see in a traditional financial market.
So I want to just dig and nerd out a little bit, not too much, but I want to just nerd out a little bit and go a little bit deeper into something that you said. So just to the users, Jeff spoke about the Ethereum network. Jeff spoke about the fact that the Ethereum network has become quite expensive to use. That's probably why you're seeing bigger ticket transactions on your protocol, because just to paint some sort of color for some of the users, doing a transaction on the Ethereum network can cost up to a couple of $100 in gas, like if you're unlucky at the time of day and what you're doing and the complexity of the transaction. Now, if you just do the maths, if you're paying a couple of $100 transaction fees, you need to be doing pretty large sums of money to justify that transaction fee. Just to be clear, this has got nothing to do with Notional. This has got to do with Ethereum that Notional is built on. But that's what I want to jump into is Ethereum is still, as far as I understand, like the largest and most pervasive smart contract protocol that's being used. However, there are a lot of very good protocols that are vying for this market share of smart contract and DeFi, specifically as the leader. You've got Tezos coming out, you've got Algorand, you've got Hedera Hashcraft. I mean, I can list hundreds, hundreds of them.
There's so many.
I mean, there literally are hundreds, right? And I'm glad you're laughing, because it is like, it's overwhelming. It's just like, oh my God, every protocol says they're actually the best protocol. Every protocol claims to be, having solved the trilemma. But you're a super experienced developer and you're super technical. And I don't want to go too deep into the technical, but I do want to know why you chose Ethereum, because I'm sure you're very aware of the other protocols out there and you still chose Ethereum. And I want to know why. I want to know why you chose to put your eggs in that basket.
Yeah, I would say choosing Ethereum was pretty much a no-brainer for us. When we were starting this project, Ethereum was the market leader in this. DeFi. We started this about a year and a half ago, so early 2020, and then this was kind of before DeFi had a big run-up and all the things that had happened. Um, at that time, Ethereum was really the only choice, and we still are very bullish on Ethereum. There's a ton of projects being launched. The kind of the total value locked, or kind of there's just a measure of how much capital is in the DeFi ecosystem is in the tens of billions, and that's just a good ecosystem to be in. And the main reason for that is if you're a borrower and you borrow money on Notional, you need to go do something with that money, right? And it's really nice to be an ecosystem where you can go put that money in a decentralized exchange to provide liquidity or trade it. You can, go to use it in one of these kind of synthetic asset protocols or these kind of decentralized hedge funds or yield farms. There's a lot of really interesting, really cool products in Ethereum in general that you can kind of lend and borrow and kind of do these cool things with, and it's very vibrant. Now, one thing we're really excited about and I think people who are in this space will see a lot of cool stuff happen in about the next year, is what we call layer 2 on Ethereum. And what that is it's just a host of new technologies that are very deeply integrated with the Ethereum blockchain. And what they'll allow for is a orders of magnitude reduction in the fees that users pay to use the Ethereum blockchain. And so there are some sort of more technical trade-offs that come with that. But, I think in the end, what we kind of envision the experience that people will get in the end are, the ability to lend money on on something like Notional Finance through their mobile app and never be aware of gas fees at all. Right. And as you get to that kind of level of user experience, you can really imagine apps where you're depositing money, like Square, Venmo, where you're depositing money directly into the app, and then it's immediately kind of lending it out for you. So money sitting in your Venmo is never not earning yield, right? And that's that. You don't get there without very low friction backends like Notional that other apps can build on top of. And so that's kind of in the next 2 or 3 years, I think is going to be where DeFi really starts to take off. And it's going to be very exciting. Yeah.
And it really just to your point earlier, where you were honest about the fact that, hey, look, our users, or let's say our borrowers, are not doing small tickets; they're doing $100,000 plus. When we get to that layer 2 scalability, when, as you said, where your cost of transaction is negligible, it doesn't have to be so big. You can then do $1,000 transactions because you don't have to worry about enormous gas fees. So, I agree that I think that's where it's going. I guess the race is to figure out how it gets done and when and by who and all of those things. So I read something pretty cool, Jeff. I read, I might have got this headline slightly wrong, but I read that there's actually a software engineer in Australia who paid off his mortgage using Notional Finance. And just to give the sort of listeners context of this, I mean, Notional Finance is only a year and a half old, and this happened a couple of months ago, I think. So it's just radical how fast this is moving. Why don't you tell me a little bit more? I'm sure you know what I'm talking about, because I think it was actually in a news headline. So tell me a little bit more about this. Who was this guy? How did he do it? What were the actual mechanics? What did he have to put down as collateral? Talk me through the whole thing, because this is now very real, right? This is a real, everyone listening to this will be like, oh, I understand a mortgage. And this guy used this thing to pay off a mortgage. So just talk me through how that happened from start to finish in the simplest terms.
Yeah. So, we've been around for Teddy, my co-founder, and I have been working on this for about a year and a half now. This person did it basically 3 days after we launched the protocol. So this was
super early adopter, right?
Yeah, we thought it was kind of whoa, this is too soon for this. But this person had essentially said that he'd been waiting around for a product like this, before Notional had launched. there are two kind of major lending and borrowing platforms on Ethereum. They're called Aave and Compound, and what they offer are variable interest rates and variable borrowing rates. And so, I'm sure as your listeners know, crypto is a very volatile place, and those variable rates can go from 8% up to 30 or 40% in a day, in an afternoon, and then kind of bounce around all the time. So for him, like taking out I think a fairly large ticket loan. I don't remember the exact amount, but it was $500,000 or more on a variable rate platform was just really not palatable. And so he had been waiting for a product like ours to launch so that he could get a fixed rate and have a lot more certainty about what the interest rate he would pay would be. And so when he saw it, he did it immediately. Now the way it worked is that this person had had a lot of Ethereum already, and Ethereum is I think the time was maybe worth about $1,000. So in that sense, so he would have had to put down probably like 750 ether. Let's call that worth $750,000. I think maybe you would put down more. So I think he put down about $1 million worth of ether.
I think the article said he had to put up about $1 million in collateral.
Yeah. Okay, right. About $1 million in ether, right? And then he borrowed, maybe half, $500,000 against that, and so that was the transaction that he did on Ethereum. Now, when if he ever repays the $500,000 he owes Notional Finance, he can withdraw the Ethereum that he posted as collateral, and that's the system guarantees that he's allowed to do that. And yeah, I think
so I want to dig in.
Yeah.
Yeah, that's super cool. It's super cool, but I want to dig in there because I think the listeners may or may not have clocked some pretty important piece of information there. When you go to a typical lender, a bank, basically, to do a mortgage, because let's compare apples with apples here. This guy he bought a house, basically. It's one way of calling it. Might have been his own house already, but he paid it off, right, in using Notional. Typically what happens is you go to a lender and you say, I want to buy this house, it's $10. And the bank says, cool, you have to put down $2 and we'll give you $8 for the house, right? So it's like it's an 80-20 loan to value ratio. Or maybe if you're lucky, it's 90-10. In the old days, when I bought my first property, we got 108% mortgages where they actually cover the cost as well as the full cost of the property. But those days are gone. What you just said is it's actually it's kind of like the reverse loan to value in Notional Finance. You actually have to put down more money than the entire amount that you want to borrow. So in this case, this chap had to put down $1 million. He had to put $1 million into Notional Finance to get $500,000 out. Talk to me about, which is really important, right? Because it actually speaks to my first question around responsible lending. It's actually a bit of a self-governing system because you actually have to put down more security than you want to actually borrow. So am I correct in saying that this is only for people that want to, I don't even know what the words are for this. I want to say like responsibly borrow, but basically you're not going to get yourself into enormous amounts of trouble because the security that you're putting into the protocol is actually more than the amount that you want to borrow. Would you say that that's fair?
No. I guess okay. I would say I guess this is the way I think about it. So when you go get a mortgage and you buy a house, the bank will never lend you more money than the house is worth, right? Now the house
so that's your security in that equation.
So if you decide not to pay your mortgage, the bank is going to take your house and sell it. And that's to make sure that the lenders, which are the depositors of the bank, get their money back, right? They've sort of like the depositors have lent you that money. And so the same, like that concept of collateral is sort of it's a law of physics of finance, right? Like you can't ever lend someone more money than they have collateral for. And so, what Notional does is it just kind of exposes it and makes it very sort of stark what's happening there, right? And so, just back to the mortgage example, right? You put down the 20% deposit to ensure that the bank has that 20% uh, to sell off your house. And that's kind of the profit margin they might make, right? Um, and so I'm not sure that Notional allows you to lend responsibly. I think you can, or borrow responsibly. I'm sure you can borrow very irresponsibly on Notional, and we would have like kind of have, that we wouldn't have a say in that. But I guess the way we think about it from our side as the builders of this thing is that the critical thing is to ensure that the lenders get their money back, right? The lenders are promised, 6% interest. That's coming from the borrowers, right? And so when the lenders want to take that money, we need to ensure that the borrowers have paid their debts. The way we do that is that if the price of Ethereum starts to fall such that we think the borrowers like won't be able to pay back their debts, they'll be able to walk away. We allow for anyone to come in and sell their Ethereum and basically take their Ethereum and repay their debt for them, right? And we give that person a little bonus, right, for doing so. So it's incentivized that they do that, and that part of the system, that liquidation framework, is critical to ensuring that protocol like ours works. It's also, I think, not to get too in the weeds here, but I think a very important feature of decentralized finance in general is this idea that anyone can come in and help guarantee the solvency of this protocol. Anyone can come in and guarantee that the protocol will make good on its promise. And that's not something that exists in the traditional financial system. It's also a reason why a lot of regulation exists, right? Because only the bank, the bank is an entity unto itself. No one is ever really sure if the bank can make good on all of the promises that it's, all the interest payments that it supposedly needs to make. And when it can't, which has happened a few times in the past, right? The government needs to come in and make good on that promise for the bank, right? Now, Notional doesn't have any governments kind of backing it, and so it needs kind of a system around it. It needs an ecosystem of people who are willing to kind of buy these debts out and kind of observe the system and watch it to ensure that it remains solvent. But on the flip side, it is extremely transparent, right? Anyone can go look at the information. They can see when every loan and borrow went through, what the price was, where the collateral sits in value. And there's no one that can stop them from kind of seeing that information, looking at the code, kind of going through this thing with a fine-tooth comb. And that is really, I think, a very exciting kind of, thing about DeFi that's sort of embedded in it, right? And you can't really get rid of that. And so that's, I would say, in my opinion, a core philosophical reason of why I'm building on DeFi in general. Yeah.
What are some of the what is the main challenge, or maybe the top two challenges that you're dealing with building in the DeFi space? Like, you're a very experienced software engineer. You've got a good amount of product management and development experience. This is a whole new space, though. It's a whole very, very young, evolving space. So I'm certain that anybody building in the DeFi space is having a wild ride, but also facing some pretty significant challenges. Like, what are some of the main challenges that you and Teddy are talking about on a daily basis or a weekly basis in terms of these are the things we really need to overcome in the DeFi space?
Yeah, I would say the top challenge for us, and I think the most important thing for us all the time, is security, right? The code is public. The transactions on the Ethereum blockchain are irreversible. And there are, I think as users probably know, there are hacks, right? That happens a lot. And for us, at the very base layer, there's software security. We test our code very thoroughly. We have auditors who look at that code very thoroughly, and getting on auditor's schedule has become increasingly difficult. So that kind of software security ecosystem and kind of process is something we spend a lot of time on. There's also kind of like the economic design of the system, right? We want to make sure that the system is designed such that there are no ways for there are no arbitrage opportunities. It's a system that gives the kind of best economic results to its users that we possibly can, because really at the end of the day we're competing with every other DeFi protocol to offer the best yields. We're competing to some extent with the traditional financial system to offer better yields, and so we need a system that offers very good kind of economics. So we spend a lot of time thinking about kind of those design aspects and that stuff. I'd say beyond that, as a CTO, I think, like we kind of talked about before, the technology in this space is just moving like extraordinarily fast, right? And the projects that I knew about 6 months ago look completely different, this month, and in 2 months they're gonna change again, right? And so keeping up with the technologies, I've largely kind of given up in a sense, right? Like more or less now it's sort of like, okay, try to pick up the kind of pieces as I go, because there's just so much happening. Yeah.
Yeah, totally. I mean, it's, and I think that's wise, actually. I think you have to pick a line and then go with that line. Like you have to make a bet, like an educated bet. Even at Nona, we're a services company, so we build stuff for companies and with companies like yours, but we can't be everything to everyone. So we have a stack, we focus on that stack. Is it the perfect use case for everything? No, definitely not. But we can't do everything for everyone. So, I mean, I fully agree with that, and I think those are actually words of quite an experienced technologist. Is pick the thing that you think will be the best, not knowing that it will, and then just go really hard on that thing, on that set of technologies or that stack. So I fully relate to that. Jeff, what other projects besides Notional do you think are exciting in the space? And then by the space, I don't even mean DeFi. I just mean FinTech in general. It can be DeFi. But what are 2 projects or 3 projects that you find interesting and are following in the broader fintech space? It can be blockchain based. It doesn't have to be.
Yeah, sure. So I would say they're going to be in the blockchain space. So the first project that I'm really interested in and I'm following quite closely is called Starkware. It is a layer 2 technology for Ethereum. And it's going to a little bit technical, but the promise of Starkware is that it is using a technology called ZK rollups. And it's a way to sort of build a layer 2 system, this kind of very low transaction fee, very fast kind of blockchain environment, without really giving up much of the security promise of interacting with the blockchain directly. And so there's a lot of math involved, but I think it's a very promising technology. So I'm keeping close tabs on them.
And ZK, ZK would stand for zero knowledge rollups, right?
Zero knowledge, yeah.
That's the not giving up. And I guess this is just to your point earlier around being part of the Ethereum ecosystem, is that you've just got tons and tons of projects that are consistently working to try and improve the ecosystem. I guess this is one of the reasons you chose Ethereum, right?
Absolutely.
Yeah. Cool. Any others?
I would say, I think here, something non-DeFi. I would say another. I'll give you another technology that's I'm following very closely. It's non-fintech, but I'm very interested in Filecoin and some of these other sort of decentralized web technologies that are coming out. And I think it's pretty early for them. There's a long way to go, but it's something I feel like on the 3 or 5 kind of year time horizon, I think they're going to become very interesting. And just for your listeners, what these things do are, it's a way of sort of how blockchain sort of is decentralizing financial applications. There are protocols that are emerging that help decentralize sort of online file storage and online hosting of data. And you can just imagine pretty much all of the internet is basically online hosting of data. This podcast is online hosted data. YouTube videos are online hosted data. And I think there's a lot of sort of exciting new products to be built on top of like a blockchain that's sort of core premise is simply data. Yeah, I think that's a very interesting space.
Yeah, absolutely. So, Jeff, last question before we move to some sort of quicker rapid fire questions. You've spoken a bit about where you see the Ethereum space going in the next X amount of time. We don't know how long it's going to take. Where do you see the DeFi space going in the next 12 months? What do you think it's going to look like 12 months from now?
Well, I think it's going to. So where I think DeFi is going, and I think this is kind of a broader trend that's happening, is just an increasing kind of like professionalization of the space, right? We're seeing more like sort of smaller hedge funds, actively, involved in DeFi, and I think that's sort of going to like kind of morph into like increasingly larger sort of hedge funds and institutions who are looking very closely at Bitcoin start to look closely at DeFi. Now, some of these kind of larger investors, don't move that quickly, but they're definitely very interested and looking very closely. And I think that's a trend that's going to continue. And I think with that is going to come sort of, I think, a professionalization of the products and the professionalization of the product experience in terms of, if you look at a lot of DeFi protocols, today or of a few months ago, they're very kind of like, they're very like fun and kind of like interesting and sometimes look like science experiments when you look at the website. I think, if they're going to want to attract sort of a more sort of professionalized kind of trader or user, they're going to like, those kind of UIs are going to start to have to look a bit different. And I think, a lot of the user experience things, they're going to get better. And we're seeing a lot of like even more centralized kind of fintech companies come along that are offering very kind of high quality custody solutions, solutions that allow you to sort of have a single wallet within a company, but then like have very granular sort of access policies of like who can trade what and like, what kind of access requirements, people have and where approvals can stack up. And so I think, as products like those emerge, I think you'll see a lot of these more kind of institutional investors get much, much more comfortable using DeFi. And so that's something that's very exciting to us.
Yeah, I agree. I mean, I see it from the other side with in fact, I had a guest on last week who's going to be published, I think, the week before you, who that's basically what they're doing. They're effectively creating a financial service or have created a financial services company that helps sophisticated institutional investors invest into digital assets because they're seeing such a rise in the requirement for that. But the mechanisms and the vehicles aren't accessible to everybody yet. So I think that legitimization and sophistication of the space, I agree. I see that happening completely. Cool, Jeff. So just moving to some more rapid fire questions. What scares you in business?
Ooh, what scares me in business? I think in this business in particular, it's the thing that's the most terrifying is security, right? Software security, and I think it's a healthy fear because we've built something that is that holds people's money, and it's it's a smart contract that holds people's money, and the thought of losing people's money because of a bug or a vulnerability in the code is, it's terrifying. And it just kind of makes me a little sick to even think about it. And so that's a driver. That's a driver for writing tens of thousands of lines of test code, right? It's kind of what kind of keeps me really focused there. And I think that's healthy. Yeah, I wish the software developers at my bank would feel the same way, right?
Yeah,
So,
I was going to say that's what you want to hear from the guys that are holding your money, right?
yeah.
What content are you consuming currently?
Content am I consuming? I when I wasn't working in blockchain, I consumed a lot of blockchain like podcasts and kind of content. Now that I'm in it, like many hours a day, the only thing I listen to is podcasts about basketball. I just need I need a break. So
I
yeah.
love it, man. I love it. What's the last book you read cover to cover?
I didn't finish it, but it's sitting on my desk. It is called Modern Operating Systems, fourth edition.
Sounds right up your alley.
It's dense.
I'm surprised it's not a security book, but I get it.
Yeah.
Jeff, what's something that you're going to be doing in the next 7 days to improve yourself or your craft?
Next 7 days to improve myself. That's a great question. So I would say, I guess being a CTO is sort of it. The thing you like to do is engineer and build the product, but that's not always the most important thing. And so, right now, what I feel like I've neglected is one is recruiting. So, hiring is something I'm going to be focused on. Another is analytics. So, just building out more reports and dashboards to get a better sense of how things are kind of going on the website and the protocol in general. So those are two things. Like I've done them in the past, but need to focus on those right now.
Yeah, and I guess one of the challenges for you, I'd imagine, is as you're scaling now because you've raised some good capital, as you're building out, your job shifts from like the doer and the maker and the guy who's writing the code to the multiplier, the person that's actually got to create scale in the team. And that's, in my experience, it's a very difficult transition for a CTO because you have the capability, you can do the thing. The trouble is you can't do all the things. So you have to transition into, well, how do I scale these things without just saying, oh, I'll build that, which is an awesome challenge, but it's awesome in the real sense of the word as well as the colloquial. It's like it's awesome in terms of like it's massive. So yeah, totally see what you're saying there. Jeff, we've spoken about a bunch of things. We jumped around a bit, which is great. Of everything we've spoken about, what is the one thing that you would want the listeners to leave with today?
I think the most important thing that I hope people realize is that cryptocurrencies, from I think people who've heard about them, maybe there's sort of a bad reputation or sort of the kind of perception that this thing is for speculators or people trying to get rich quick, or a lot of scams and a lot of schemes. And while that is true, there's no denying that. I think that I hope people hear that there are real legitimate reasons for this technology to exist. There are real problems that it solves. There's real things that it does in sort of 100x improvement over how things are done today in terms of financial systems, in terms of sort of legal applications, the idea of like self-ownership, privacy. There are ways in this technology is built to be kind of digitally native and guarantee all these nice things to the user. And so, I hope that's kind of like enough to pique people's interest to sort of learn more about this technology and like all the great things that it can do. And it's sort of what drew me into this space. And my hope is like more people come in and start working on crypto, because I think it's just a really exciting place to be. Yeah.
I agree. Jeff, it's been really interesting speaking to you. I've thoroughly enjoyed the conversation and going a little deeper and scratching more than just the surface around DeFi and lending protocols. Do you like to be contacted and or followed? And if you do, how can the listeners best contact or follow you?
That's a great question.
I feel like that might have been a loaded question.
I don't like to be contacted. No, how about we say this? The best way to find out about what we're doing is to follow Notional Finance on Twitter. We're always talking about what we're up to and where we're taking our protocol. So
yeah, Spoken like a true CTO. I don't like to be contacted. Rather follow the business. Let me just do some work. Let me just get my work done. Right. I love it. I absolutely love it. I love the honesty as well. Awesome,
Yeah.
Jeff. Thanks so much for making the time, for sharing your journey, for sharing your insights. I really found it valuable and interesting. I really appreciate the time and your shares.
All right. Thanks a lot, Mike. Thanks for having me.
And to the listeners, I hope you got some value from today's show with Jeff. I definitely did. I think my main takeaway is it wasn't a main takeaway as such, more just filling in a bunch of gaps for me. I mean, I thought I understood the space pretty well. It was nice hearing from Jeff to just fill in a bunch of blank spots for me, and I'm leaving this definitely understanding the space a lot better. So thanks for listening to the How to Be Moderately Successful podcast. If you have a fintech project that you would like to accelerate with a partner that'll take care of your design and your development to allow you to focus on your area of genius, we'd love to help you. Head over to nona.digital to book a call with one of our principals, or just follow any of the contacts in the show notes. And another plug, we're actively hiring seniors. So if you are a senior or know any seniors, put them in touch, and there's a tasty reward in that for any successful placements. And I'll be back next week with another episode to help you build better businesses, better fintech products, and a better you.